developed countries, especially US, has something that emerging countries do not have. The US has a printing machine that can print an unlimited amount of money, and yet its currency could still be well supported. The emerging countries don't have that, especially those that owe debts in foreign currencies, in US dollars. For example, countries like Indonesia, India, they owe debts in US dollar. So what would be the effect if they keep printing money? If they print money like what US is doing, their currency will depreciate tremendously. Yeah. Hence, their debt load don't get any lesser because they can print money, but they still owe the same amount of US dollars because in their own currency, their US dollar, their debt has actually grown larger because their own currency has depreciated. And hence, it could actually, the printing money could bring them into trouble as they could cause inflation as their currency depreciates and their debts continue to remain at a high level. So especially, the most dangerous countries will be those that have a high amount of foreign debts. Usually the US dollar denominated debts. So if this COVID issues, I'll say, concerns persist, so some of these countries could be in trouble because they cannot print money like US does, out of their trouble. Okay, that is during COVID time. So I say we've got to be more careful about the whole sovereign solvency, which also will affect the company's solvency. Then let's talk about emerging countries, not in the context of COVID-19. Okay, generally, emerging countries are growing faster than the developed countries. They started from a lower base, their population is younger, so they could consume a lot more. And that is true, okay? And that could also be a good reason to be investing in the emerging countries. However, one thing to be mindful is corporate governance. Secondly, also, the majority shareholders, if they don't have, if they don't have integrity, they could actually really cheat the minority public shareholders openly. One of the way is to issue shares at a preferential price to their own circle of friends and themselves. Immediately, the public shareholder will be shortchanged, and they can't do anything about it. So I say corporate governance is something very important, and hence we need to be very sure, of the corporate governance of the company that you're investing in. If I'm investing in the emerging countries, let me share with you a few ways if you want to invest in emerging countries' companies. One way is to invest in a company where the majority shareholders is actually a company or a group or an individual that is known to have integrity. So for example, if a long-standing European company is the majority shareholder of that company, then it has an influence over the corporate governance of that company. And then that gives you some assurance of the corporate governance. And so secondly, you can look at it, I think I would largely want to forego the very new companies because there's no track record. And I will give a higher priority to risk rather than return. So I'd rather not make that return than to lose my money because of poor corporate governance.